Gold just crossed 7,500 rupees per gram in Pakistan, and the government is now in full emergency mode. This is not a drill. While you were sleeping, Pakistan's central bank held an urgent meeting at midnight to discuss emergency measures that could change everything for gold investors in the region. The physical gold market in Karachi has gone absolutely insane, with premiums spiking to levels we haven't seen since the 2008 financial crisis. If you're holding gold, if you're thinking about buying gold, or if you care about your purchasing power in South Asia, the next 20 minutes could be the most important thing you watch this week. Here's what they don't want you to know. Let me set the scene for you. 48 hours ago, gold was trading at around 7,200 rupees per gram in Pakistan. That already seemed high, right? But in the last two trading sessions, we've seen a vertical move that has shocked even the most experienced precious metals traders in the region. The Pakistani rupee has been under immense pressure, and that pressure just hit a breaking point. What we're witnessing right now is a perfect storm of currency devaluation, import restrictions, and panic buying that's creating a supply crisis in the physical gold market. Now, to understand why this matters globally, you need to understand Pakistan's position in the gold market. Pakistan imports approximately 100 tons of gold annually, making it one of the significant players in Asian gold demand. But here's where it gets interesting. In the last 72 hours, commercial banks in Karachi, Lahore, and Islamabad have reported that their gold inventory has been completely wiped out. We're talking about zero inventory at major bullion dealers. When I reached out to my contacts on the ground in Pakistan, they told me that people are lining up outside gold shops at 5 in the morning, and by noon, everything is sold out. This is panic buying on a scale that most people in the West can't even comprehend. The State Bank of Pakistan held that emergency meeting I mentioned, and sources tell me they discussed three potential responses. First, imposing immediate capital controls on gold imports. Second, increasing the regulatory duty on gold to make it prohibitively expensive. And third, potentially creating a government-controlled gold distribution system. Now, if you understand monetary history, you know that when governments start controlling gold, that's when you should really start paying attention. This isn't just about Pakistan. This is a blueprint for what we could see in other emerging markets when their currencies start to collapse. Let me break down the mechanics of what's actually happening here, because the mainstream financial media is completely missing the real story. The official narrative is that gold prices in Pakistan are rising because of global gold prices increasing. That's partially true. Gold in US dollar terms is hovering around $2,050 per ounce right now, but that doesn't explain the massive premium we're seeing in Pakistan. Let me show you the math that reveals the real crisis. The Pakistani rupee has devalued by approximately 18% against the US dollar in the last 6 months, but gold prices in rupee terms have increased by 32% in the same period. That means there's a 14% premium that has nothing to do with international gold prices and everything to do with local supply and demand dynamics. This is what a currency crisis looks like in real time. When people lose faith in their paper currency, they rush into hard assets, and gold is always the first place they go. Now let's talk about the import situation, because this is where the emergency response comes into play. Pakistan's foreign exchange reserves are currently sitting at around $7.9 billion. That might sound like a lot, but for a country of 240 million people, it's dangerously low. That's barely enough to cover 2 months of imports. The government is desperately trying to conserve foreign exchange, which means they're restricting imports of non-essential items. And guess what category gold falls into? Non-essential. So we have a situation where demand for gold is exploding, but the government is making it harder and harder to import gold into the country. Basic economics tells you what happens next. Prices go parabolic. Here's the data point that should make everyone pay attention. The premium on physical gold in Pakistan compared to the London spot price is now at 22%. Let me repeat that, 22%. In normal market conditions, that premium should be between 2 and 4% to cover shipping, insurance, and dealer margins. A 22% premium tells you that there is a severe physical shortage. This is exactly what we saw in India during their import restrictions in 2013, and we all remember what happened there. The government restrictions didn't stop demand. They just pushed it into the black market, and premiums went even higher. Now, I want to connect this to what's happening in the broader precious metals market, because this isn't happening in isolation. If you've been following my analysis, you know I've been tracking the COMEX registered silver inventory, and we're seeing similar stress signals there. The registered silver available for delivery on the COMEX is down to approximately 47 million ounces. That's a 10-year low. What does silver have to do with Pakistan's gold crisis? Everything. because what we're witnessing is a global phenomenon of people waking up to the reality that paper currency is being devalued everywhere, and physical precious metals are the escape valve. Look at this chart. This is the COMEX registered silver inventory over the last 24 months. We've seen a steady drawdown that has accelerated dramatically in the last 90 days. At the same time, open interest in silver futures has been climbing. That means more paper claims on physical metal, but less physical metal actually available. This is the setup for a short squeeze of historic proportions. And what's happening in Pakistan's gold market is a microcosm of what could happen globally when the paper markets finally break. Let me give you some context on how these markets are manipulated, because understanding the manipulation helps you understand why the emergency response in Pakistan matters. The big bullion banks have been suppressing gold and silver prices for decades through the futures market. They create unlimited paper contracts that give the illusion of supply, which keeps prices from reflecting the true physical scarcity. But when a country like Pakistan suddenly can't get physical gold because of import restrictions, that manipulation breaks down at the local level. The paper price becomes irrelevant. The only thing that matters is what someone with physical gold will actually sell it for. This is why Pakistan's emergency response is so significant. If they impose strict capital controls on gold, it will create a two-tier market. There will be the official market at the government-controlled price, and there will be the black market at the real price. And history shows us that the black market price is always closer to the true value. This happened in Venezuela, it happened in Zimbabwe, it happened in Argentina. When governments try to control gold, they always fail, but in the process, they prove exactly why people need to own gold in the first place. Now let's talk about the Shanghai Gold Exchange, because this is where things get really interesting. China has been systematically building a gold market that operates independently of Western control. The Shanghai Gold Exchange now handles more physical gold volume than London or New York, and the premium between Shanghai gold prices and London gold prices has been widening. This tells us that physical gold is flowing from west to east, and the east is willing to pay a premium to get it. Pakistan's crisis is part of this larger shift. Asian buyers are increasingly dominating the physical gold market, and when they face supply constraints, prices spike dramatically. All right, let's get into the technical analysis because traders need to know what levels to watch and what's coming next. I'm going to focus on gold in US dollar terms first, and then we'll look at what this means for Pakistan specifically. Looking at gold on the 4-hour chart, we're currently trading at $2,053 per ounce. We've got major support at the $2,020 level, which was previous resistance that we broke through about 10 days ago. That support is held on 3 separate tests now, which tells me we've got strong buying interest at that level. The next major resistance is at $2,095, which is the high from early December. If we break through that level with conviction, we're going to see a rush to $2,100 very quickly. The RSI on the 4-hour chart is sitting at about 58, which means we're not overbought yet. We've got room to run higher before we need to worry about a technical pullback. The MACD has crossed bullish, and the histogram is expanding, which tells me momentum is building to the upside. Now here's what's important. If gold in dollar terms breaks above 2,100, that's going to translate to approximately 7,800 rupees per gram in Pakistan, assuming the exchange rate stays stable. But here's the thing. The exchange rate isn't going to stay stable. Look at this dollar-rupee chart. We're in a clear uptrend channel that started back in October. Every time we've touched the bottom of this channel, we've bounced higher. We're currently sitting at about 287 rupees per dollar, and the next resistance level is at 295. If we break through 295, we're going to see a panic move to 310, maybe 320. And if that happens, gold prices in Pakistan are going to go absolutely ballistic, regardless of what happens to the dollar price of gold. Now, from a technical perspective, there's a major decision point coming in the next 72 hours. The State Bank of Pakistan is going to announce their emergency measures, and the market is going to react violently one way or the other. If they announce strict capital controls and import bans, we're going to see the premium on physical gold spike even higher. We could easily see 8,000 rupees per gram within a week. On the other hand, if they somehow manage to stabilize the currency and open up imports, we might see a temporary relief rally in the rupee and a pullback in gold prices. But I want to be clear. Any pullback in this environment is a buying opportunity, not a reason to sell. The volume analysis on gold is showing us something critical. We're seeing massive volume on up days and light volume on down days. That's classic accumulation behavior. Smart money is buying every dip. The pullbacks are getting shallower and the rallies are getting stronger. This is the kind of price action you see at the beginning of a major bull run, not at the end. If you're sitting on the sidelines waiting for gold to crash back to $1,900, I think you're going to be waiting a very long time. So where is this headed? Let me give you my analysis and predictions for the next 30 to 60 days, because this is where we separate the amateur traders from the professionals who actually understand macroeconomics. Short term. In the next week to 10 days, I expect gold in Pakistan to test 8,000 rupees per gram. The emergency measures from the central bank are going to backfire. They always do. When you restrict supply in the face of panic demand, prices explode higher. We're going to see more reports of gold shops being empty, more stories of people bribing dealers to get access to inventory, and more pressure on the government to do something. But here's the reality. There's nothing they can do. They can't print gold. They can't create supply out of thin air. The only way to solve a shortage is higher prices or increased imports, and they don't have the foreign exchange reserves to increase imports. Medium term, looking out 30 to 60 days, I think we're going to see gold in US dollar terms break 2,100 and head toward 2,200. The Federal Reserve is going to be forced to pivot back to easier monetary policy as the economy weakens. When that happens, the dollar is going to come under pressure and gold is going to rocket higher. For Pakistan, that means we could be looking at 9,000 rupees per gram by the end of March. I know that sounds crazy. I know people are going to say that's impossible. But remember, gold went from 5,000 to 7,500 in less than 6 months. Another 1,500 rupees in 60 days is not only possible, it's probable given the current trajectory. The key levels to watch are $2,095 on the upside for gold globally and 295 rupees per dollar for the currency pair. If both of those levels break, we're going to see a cascade effect that pushes gold prices in Pakistan into territory that most people think is impossible. The physical shortage is real, the currency crisis is real, and the government's emergency response is going to make it worse, not better. Look, here's the bottom line. What's happening in Pakistan right now is a warning signal for the entire global financial system. When paper currencies lose credibility, people flee to hard assets. Gold at 7,500 rupees per gram isn't expensive. It's appropriately priced for a currency that's being systematically devalued. The emergency response from Pakistan's government is going to fail because you cannot solve a monetary crisis with the same monetary policies that created the crisis in the first place. If you found this analysis valuable, if you learned something today, I need you to smash that like button right now. It helps this content reach more people who need to understand what's really happening in these markets. And here's what I want to know from you. What do you think will happen next? Do you think gold in Pakistan hits 8,000 rupees per gram? Do you think the government's emergency measures will work? Drop your price predictions in the comments. I read every single one, and I'll respond to the most interesting analyses. If you're not subscribed to this channel yet, what are you waiting for? These markets move fast, and you need to stay ahead of the curve. Hit that subscribe button and turn on notifications so you don't miss the next update. Because trust me, this story is just getting started. The gold market is about to do something that's going to shock the world, and you want to be positioned correctly when it happens. I'll see you in the next one. Stay sharp.